Welcome back again to the BPMA to come and talk.
Great to be here. Yeah.
So I kind of wanted to get a bit of an idea about, some of the things that you're all facing with business, because you're talking to a massive variety of businesses across the UK now. I think probably more extended as we move forward. And of course, Peter, you're a chartered accountant as well. Thankfully, I'm not. You are, which is a much better place to be. But I think one of the things you and I have talked about a lot is we've had our heads down in distress mode for a really long time, and I think everyone's been coping incredibly well. We've been talking to our members about things they've had to do to survive during this period of time, and I'm guessing obviously been a lot of business failures, have been a lot of successes during this period of time where people have pivoted their business. I guess if people are thinking about what's been happening with them, I'm really intrigued to find out the kind of things that you're experiencing when people have been talking about either business maybe that lost, possibly even personal wealth, maybe. People are feeling quite exposed at the moment about how they get going from this very odd place that they've been in. And I'd love to understand a little bit more about what you're advising businesses to do and about the risks, about minimising risks in particular moving forward.
Okay, great to be here. I've had the second jab, so I'm okay, I'm sorted. But I think one of the things before we do any of this, get into any of the detail, is yes, I deal with lots and lots of businesses in all shapes and sizes, all different industries. And when I have these conversations, they go, yeah, but my business is like this. Oh, yeah, but that doesn't apply to me. And actually what you find when you drill down is they are the same issues across most businesses in most industries. So there isn't really anything unique to most industries. There might be little tweaks or little quirks in different industries, but these are the same conversations I'm having with my clients of all shapes and sizes in all different places, because the fundamentals of business are fundamental. They're the same for everybody. So probably I would starting with that point about exposure to risk and financial concerns, etc. Something that we've been talking about for decades probably, which people sometimes listen to and sometimes don't, is probably this issue of business structure. So let me give you a very simple binary example. On the one hand, you can have a business which is one single company. So it does everything. It recruits people, employs people, buys stuff, sells stuff, collects money in, borrows money from the bank, owns buildings. It does all the things because there's one structure that everything has to be done through. Fingers crossed it makes enough money to make a profit for the business owners. But if there is a catastrophe in that business, then all those financial eggs in that same basket puts everything at risk. Decades worth of sweat equity, as I often call it, hard work, building that wealth can be wiped out in a single catastrophe. Now, none of us saw COVID coming, but other catastrophes, a single bad debt, a huge unfair dismissal claim based on one of the grounds where there's no upper limit to the claim, etc. There are lots of catastrophes that can happen. COVID is definitely focused the mind of people about things outside of their control that can cause damage. But all your eggs are in that one basket, you lose everything. The alternative to that, so the opposite end of the binary scale, is to say, okay, I'm not going to have one company, I'll have two. So you put a holding company above, and that company owns all the good stuff. So it owns the buildings, it owns plant and equipment. If you've got cash, that's where it should be stored. All the good stuff, intellectual property, brands, website ownership. I had a taxi client where the phone number was the only valuable bit. All that's in this company. The remaining day-to-day trading, the risk of employment, the collection of debts, all the other things are left in the trading subsidiary. If there is a catastrophe in that situation, and you've set it up properly, you can draw a line between the two and go, not my problem. Limited liability protection means that you go, nothing I can do about it. And the wealth up there is safe and protected. Now, that's pretty much common sense. The issue for most clients is one of complexity and risk. One company, simple, one set of accounts, one tax return, everything's at the same place, easy. Two companies, two sets of accounts, two tax returns. I've got to work out what the accounting issues are. Do I need to have two versions of Sage, etc.? So even just two companies, people go, oh, a bit complicated. So in the good times, they go for simplicity and accept there's a bit of a risk with that. In the bad times, they go, oh, I need this complexity because I want the protection. The problem is, by the time they make that decision, the bad times are here, and a lot of the things you need to do can't be done like that. If your business is in trouble and you go, right, set up a holding company, move everything, and it goes bust the next day, that won't work. There is a time lag. In most cases, it's up to 2 years if it's a connected transaction for insolvency purposes, but there's a time lag between doing something and when it becomes bomb-proof from attack. So that's the problem we find, is lots of businesses go, I don't need it. And then when they do need it, it's too late to do it. So that's probably a conversation which has become much more front of mind in the last year than it was previously. It's a bit like car insurance. Nobody wants to pay for car insurance. If it wasn't compulsory, most people wouldn't pay for it. And then some people are going to have a huge impact, literally impact, liability that will be a catastrophic financial consequence for them. So insurance on cars takes that risk away. It's the same principle. And I think that's one of those areas that I would say to most clients, it's crazy to run your complicated, difficult, risky business in one single structure. You should at the very least have two companies in that group. And then I think in terms of the current situation, if you accept the principle, which is 2 companies, a bit more complicated, but it gives me better protection, well, maybe you need 3 or 4 or 5. So should you, for example, do all your online sales through a separate entity compared to your offline sales? Does that allow different branding and different price points and different risk profiles? Should you have geography, north and south? Should you have product lines? Once you get the idea of putting bits in different boxes helps me, and the trade-off of risk and complexity is worth it, then it's worth really drilling down to, okay, is 2 enough? Should I have more companies? Should I be doing it in a more complicated way? And then the final thing about that, which is a byproduct of it really, but I wouldn't underestimate it, is when you have one company with multiple facets to your business. I have online, I have offline, I have premium clients, I have trade clients, I have London-based elements and northern-based elements. Once you put all of those into one company, you do what we call average decision making. You make a marketing plan that is okay for all those areas. You have a people management plan which fits all those kinds of people. Once you put them into different boxes, then you get the ability to say, well, actually, that bit of the business needs to be run this way. Different investment plans, different marketing strategies, et cetera, et cetera. In our business, for example, we do a lot of consultancy work alongside the main accounting practice. We used to run that in one business, and actually what we found is they're very different. Consultancy is feast or famine, you're busy or you're not. Accountancy is every year the work comes back in again. Different animals, different management, different decision making. So when you separate companies, you get a bit more clarity about which each of those business needs. When you put them in one place, all your eggs are in that one basket, and you get that average decision making. And I would say that conversation is probably one that's leapt to front of mind, because people have for the last year or more been actually terrified the whole lot's going to go, and they wanted to do something about it. Does that make sense, Karen?
It does, definitely. I think there's a lot of complexity potential. I'm sure there's 1 or 2 people listening to this thinking actually that feels like that's an enormous thing possibly to take on. I think this is probably where the job of your accountant comes in, to look at probably the structure of your business and to advise you. And I think that's something you and I both picked up on this year, is maybe accountants haven't been that communicative during this time. We'd like to obviously, I think this is probably where you go for some of that advice.